She's Anna, and I'm Sheena. Welcome back to Jamaica's #1 program, Centrally Speaking. Centrally Speaking is a program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life.
Stay with us as we break down economic matters so that everyone can understand. Sheena,
Yes,
inflation targeting.
yes,
We discuss it again.
yes.
We're talking to Dr. Wayne Robinson today,
Senior Deputy Governor of Bank of Jamaica.
and no stranger to Centrally Speaking.
He's our resident advisor.
Hallelujah. So we know one main reason for inflation is having too much money competing to buy the available goods at their existing prices.
And today, our very special guest will update us on what has been achieved since we started on this inflation targeting campaign and what to expect for the rest of 2022.
But before that, let's head
To
to
the
the streets.
I think it's ridiculous. It's terrible because if you're supposed to like check your receipt for this week, you don't even have to wait until a month. All it takes is for you to shop this week and you can see a big difference with the price list for just on a weekly basis. So by the time it gets to a month, you will notice like one particular item that I usually use. I noticed there was an increase on that particular item for like about 4 times for the 1 month.
It's at an all-time increase for such a short period of time because, I mean, going about each day, you can realize that prices increase in products and services is like a steadily growing thing. You know, it's not just over the year. It's like daily increase these days. Because you can take the gas, for instance. Some places you go, you see 250, you see 230, some places 260. You see me? So it kind of varies.
Have you seen the prices for food? Like even buying lunch from restaurants, that is expensive. Doing meal preps is still expensive because a few years ago, I could do a meal prep for $1,000 for the week. Now it's costing me $2,500, $3,000 for the same items. So it's been rough.
I would definitely say that it's getting out of control, especially if you were to check a lot of the places here that sells like food, you want lunch and all of that, the supermarket prices have escalated out of proportion, right?
The current movement for prices is going pretty high, basically. Even right now, I used to drive to work, and it basically really makes no sense you drive to work because of the gas prices and everything. It's just so high. It makes sense just like take taxi, I guess. Even in the supermarkets, a few years ago, what $4,000 could get you, you cannot get that today. So it's really affecting everybody. Basically, both persons that are wealthy and persons that are below the minimum wage line, it affects everybody.
We can always count on the people in the streets because them know the thing, you know.
Them know it.
In the next segment, Dr. Wayne Robinson, Senior Deputy Governor at Bank of Jamaica, will give us an update on inflation.
No pun intended on that up. But before we hear from Dr. Wayne Robinson, here's a good word from Bank of Jamaica.
We're here to open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for Save to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
Welcome back to Centrally Speaking. Dr. Wayne Robinson, Senior Deputy Governor of Bank of Jamaica, is our very special guest.
Dr. Robinson, welcome back to Centrally Speaking.
Thank you, Anna.
Yeah.
Thanks, Sheena. It's so good to be back.
Yeah.
It is good to see you.
A resident
Resident advisor.
advisor.
So Wayne, In your most recent monetary policy statement, BOJ announced its decision to increase the policy interest rate by 50 basis points or to 5% per annum. Share with us why this was necessary.
Okay, Sheena. Bank of Jamaica's primary mandate
Yeah.
is price stability. We are the only institution in the country that is charged with that mandate. And the reason is that, as we all appreciate, inflation impacts the poor.
Right.
Inflation hurts persons who are on fixed income. Inflation impacts pensioners.
Right.
Inflation also impacts businesses as well. So we have been given this mandate to try and achieve and maintain inflation that is low,
Stable and
predictable.
predictable. You got it. But what do we mean by that?
Yes.
Really? We mean a rate of increase in prices that is such that businesses can continue to grow and the ordinary persons don't have to worry too much about price increases.
Right.
That's the environment that we want to create. So the government has given us a specific target to try to achieve and maintain inflation in the range of 4% to 6% per annum. Now, Sheena, Anna, since last year, what has been actually happening is that inflation has gone way above that.
Right.
As at April, inflation, as reported by Statin, was 11.8%.
Yeah.
That's significant.
Yeah, man, we feel it.
Yeah.
Yeah, yeah. And more importantly, though, when we look ahead, we expect that inflation will continue to remain significantly above
Right.
our inflation target. In fact, we're not expecting that inflation will come back to the target before next year.
Okay.
2023.
Specifically 2023, specifically the second half
Of next
the
year.
And even then, we're concerned that there are risks to this outlook.
Right.
So it is against this background that the Monetary Policy Committee decided to continue to adjust interest rates
Okay.
by effecting another 50 basis point increase.
That's like 0.5%.
Yeah.
Yeah. Now, what's important to remember, Sheena and Anna, is that prior to this, Bank of Jamaica has reduced its policy rate to a historic low
Right.
Yeah, I
of
remember.
0.5%.
Yeah,
Yes.
I remember.
Not only that, but when COVID hit, the Bank of Jamaica injected significant amount of Jamaican dollar liquidity in the system,
Right.
all in an effort to support the economy. So we created a very accommodative financial environment,
Right.
which in and of itself can actually create inflation.
Yes.
So meaning because more money was in the system?
Yes.
Precisely, precisely, you got it.
I'm listening.
Now we're in a scenario where we've had this inflation shock.
Right.
Yeah.
So therefore, we then have to try to unwind this accommodation, this monetary accommodation, as we've called it.
Right.
And so that is why we've begun to increase interest rate, and we have been doing so since October. Because if we did not do this, if we did nothing in the face of these shocks, we would actually be creating more problems. We would be running the risk of actually adding to the inflation challenge.
Okay.
Now, Bank of Jamaica isn't unique. Jamaica isn't unique in this. Central banks all over the world, they are facing the same challenge.
Yeah.
Right.
Now, of course, there is the concern about how our policy adjustments will affect economic activity and growth. And that's a real concern, and that's something we spend a lot of time grappling with. What we've done, though, if you look at how we have approached this, we have tried to calibrate our adjustments such that it will minimize any adverse impact on growth and any adverse impact on the economy.
You would have pointed out earlier that there was money in the economy. So this is an intended objective then.
We're doing a couple of things.
Right.
We have raised interest rates.
Right.
Or we are raising interest rates. Also, we are trying to reabsorb Jamaican dollar liquidity
Right.
from the system.
Okay.
That's the second thing.
Okay.
The third thing as well, we are trying to maintain a more stable exchange rate.
Okay.
Okay? So you will note, Sheena, Anno, particularly since October going into this year, the bank has been very proactive in supplying foreign currency directly to the market through our BFixit operation,
Yes.
Right.
and also providing foreign currency directly to the energy sector.
Right.
In fact, I can tell you, since October, we have sold directly through BFixit approximately 550 million US dollars
Since
to
October.
the market.
Right.
Yeah.
Okay.
In addition to that, we have sold about 560 million US dollars to the energy sector, mainly Petrojam.
Wow.
So in total, we have provided roughly over about 1.1 billion US dollars to the system in an effort to ensure that the exchange rate or the movements in the exchange rate itself doesn't add to inflation.
That's fantastic.
In addition, as I said, we have been keeping a very tight rein on Jamaican dollar liquidity.
Okay.
So every week we offer 30-day securities to commercial banks and primary dealers
Yeah.
that they can invest in.
Yeah.
Okay.
So we have been gradually increasing the amount of those securities that we have been provided.
Okay.
So we actually have a three-prong approach where we're actually raising the policy rate.
Right.
And in so doing, we're actually signaling to the market and signaling to the economy that interest rates should rise gradually. And at the same time, we are constraining Jamaican dollar liquidity, and we're very active in trying to keep the exchange rate stable.
All right. So Dr. Rob, you were just giving us some impressive numbers about the foreign exchange that you have injected into the market, to the energy sector and to the domestic sector. So that means the BOG have enough reserves. Yeah, enough. So let me just ask you this simple question. How much reserve you have? What is the size of the reserve? And is it adequate for our needs? Although we think I can say yes.
Currently, our gross reserves, or gross foreign reserves, stands at 4.4 billion
US dollars.
Okay.
Now you're going to ask, well, why do we hold reserves? Why do we hold so much reserves? Well, first of all, Bank of Jamaica has to ensure that it has foreign currency to service the government's external debt. You know, the government borrows from abroad, and it borrows in foreign currency as well. So therefore, it has to pay back in foreign currency. So we have to have foreign currency to meet those needs.
Right.
Okay.
But in addition, your mother always say, must save for rainy day,
Yeah.
right?
Yeah.
Right. So
I
as a
thought so.
country, we also have to have some rainy day savings. Because you see, you could have a fallout in one of our major export sectors like tourism.
Right.
You could have a fallout in remittances. You could also have, as what we're seeing now, a sharp spike in oil prices as well. You could also have a situation where, for whatever reason, there could be a loss of confidence. So all of a sudden, people don't really want to hold Jamaican dollars. Everybody's rushing foreign currency.
Right.
So you have to ensure that you have reserves to meet all of these circumstances.
Just in case.
Just in case.
Get Bex money.
Just.
I really think get back money still. Contingency fund, rainy day.
So what the economists at the bank do, they use the IMF's framework.
Right.
It's called the Framework for Assessing Reserve Adequacy. And within that framework, they try to estimate, well, if all of these conditions should happen, how much foreign exchange you really need? What's the minimum amount of foreign exchange that you really need in the event that all of these circumstances should happen? And so that defines a benchmark.
Okay.
And based on our estimates, the 4.4 billion is currently 130% of that minimum benchmark. So we have more than adequate reserves. Now, it is very important for a small country like Jamaica because we're very vulnerable to shocks. I mean, a hurricane could come tomorrow and wipe out agriculture and wipe out the tourism sector. So we have to have some money in the kitty that will enable us to cushion the economy if one or more or a combination of these factors should materialize.
All right, so Wayne, what should we expect from increasing the interest rates, and why are we not seeing it?
Well, when Bank of Jamaica raises its policy rate, it causes all other interest rates to rise.
Okay.
Okay. So you have you have a credit card, I'm sure, and you have to pay interest on that.
Okay.
That rate will rise. You have a little money in a bank,
Yeah.
a little passbook, I'm sure. I'm sure Anna has a
People
whole
steal
lot
passwords.
more.
Okay.
One name so.
What's a
One
password?
name so.
Okay, I'm kind of dated that side here, but okay. But you get
I
the
joke.
point.
I joke.
Yeah.
We know.
We get it.
You know, so the rate that you get on your deposits
Yeah.
in a commercial bank, that will also go up. Also, you know,
Not,
Hopefully.
incrementally.
Yeah.
Or is it supposed to be instantaneous?
no, it's not going to be
Oh,
instantaneous.
that is the problem.
Yeah.
It's not going to be
Yeah.
instantaneous, but it will happen.
Okay.
It will happen because it takes time. It takes time for banks to react. Also, the government from time to time, in fact, every month, the government offers treasury bills
Right.
that you and I can invest in. So the interest rates on those treasury bills will go up.
Okay.
So what you see happening here then is that the things that you can save in, the returns on those instruments actually go up.
Right.
Also, the cost of borrowing
Also goes up.
also goes up.
Yeah.
So as a rational consumer, what you're going to do then is that you will find that you have a greater incentive to actually save more
Than spend.
than
spend.
Right.
Yeah.
Now, when you decide to spend less, it means that the ability of a producer or retailer to pass on price increases is reduced.
Yeah, that's also less. Yeah.
That is also lessened. And so that in effect dampens the rate at which prices are going up, or
Okay.
it dampens inflation.
Okay. Inflation as at April 2022 was at 11.8%. This is obviously a breach of the 4.6% target as established by the bank. What has contributed to that breach, and when can we expect a reversal?
Okay. All right. The inflation problem we're facing now is a result of two shocks
Yes.
in almost quick succession.
COVID.
COVID and
and
war.
the conflict in
Yeah.
Ukraine. I call it the Twin C shock.
Oh,
Now remember, when we were coming out of COVID, following the lockdown, we had a long period of lockdown.
yes.
So people had a lot of pent-up demand. So when things started to open up, what we found is that firms and farmers and businesses, they weren't able to ramp up production
To meet the demand.
to meet the demand, both in terms of the quantity and at the pace that is needed.
Right.
Not only that, even when they were able to produce, they weren't able to ship the goods
Yeah.
as
Quickly
quickly
as
as possible.
before, right?
Because
Yeah.
we had a lot of supply chain
Problems.
bottlenecks.
Right.
Yes.
Right.
So that in a context where demand from people who are going back out
Yeah.
picked up, caused price to rise very sharply.
Yeah.
Then after we thought we were getting over that, then came the war in Ukraine.
Right.
Now, Russia and Ukraine are two important countries because Russia is one of the largest producers and exporters of oil in
Right.
the world.
Right.
Not only that, both Russia and Ukraine produce significant amount of grains
Grain,
that they
right.
export.
Yes.
Right.
And they produce a number of things that actually go into the production of fertilizer,
Right.
Okay.
which is also critical.
Right.
So then we had another supply shock, and that drove the price of these commodities. At the same time, while all of this was happening, in China, China had a very strict lockdown policy,
Right.
on because of COVID. So that in and of itself also exacerbated the supply chain.
Right.
So it's a confluence of things, almost like a perfect storm, that caused commodity prices to really shoot up.
Right.
Now you ask, when
Yes.
can we?
Yeah.
Expect some
Okay.
reversal to the target.
Well, we're expecting that certainly by the second half of this year, things will begin to moderate.
Right.
Right.
And as I indicated earlier, by next year, more like the second half of 2023,
Yes.
we expect that inflation should begin to come back down into the 4 to 6%.
So that's like after
range.
June.
Yeah.
That's
Then
after
probably,
June.
right. Mhm.
Yeah, next year.
Mhm.
But this is based on three critical factors,
And those
three
are?
critical assumptions. One, that the war in Ukraine doesn't get worse.
Yeah.
Doesn't
Okay.
spread. Secondly,
Yeah.
and relating to that, assuming that things don't get worse there, most forecasters around the world are expecting that these commodity prices should start to come down towards the latter part of this year,
Okay.
from
Okay.
about June. Most forecasters are expecting that.
Right.
Okay.
And that's because they're expecting supply conditions to improve.
To improve, right.
Okay.
Mhm.
So they're expecting some moderation.
And that's because China would come out of lockdown and so on.
Right.
Right,
And
okay.
better weather.
Okay.
Right.
And in the other grain producing countries, their supplies will begin to come back
To
on
ramp up.
stream.
Okay.
Okay.
So that is the outlook as it is today.
Yeah.
The other critical assumption is based on the impact of our monetary policy actions.
I see.
Which, as I explained before, one was meant to stabilize the exchange rate and sort of restrain demand in the economy.
Right.
So if all of these three things come together, we feel confident that things could begin to improve.
Okay.
But I must stress, there are risks around this.
All right. So, Dr. Rob, I'm curious. Who makes these monetary policy decisions? Is it you and the governor?
No, Sheena.
Okay.
Let me give you a bit of context.
Okay.
When the government reformed the Bank of Jamaica, it not only gave Bank of Jamaica the primary mandate of price stability,
Okay.
but it gave the bank the autonomy to make monetary policy decisions. Now, in giving the bank that autonomy, it sought to strengthen the governance infrastructure, the governance arrangements around such decisions.
Okay.
So one of the things it did was to introduce two statutory committees, one of which was the Monetary Policy Committee.
Right.
So since last year, April, when the new law became effective, monetary policy decisions are made by the Monetary Policy Committee.
Okay.
Before, it was the purview of the governor
Right. I was about to ask what happened before.
on the advice of his senior technocrats.
Right.
Which would be you.
Which me and
others.
and others.
Right.
But now it is done by this committee.
Right.
Now, this committee is made up of the governor, of course, who chairs the committee,
Right.
the senior deputy governor,
Which is you.
Which is you.
yours truly, who is in charge of monetary policy, responsible for monetary policy.
Right.
It also comprised the deputy governor in charge of the economics division of the bank. That's Mr. Robert Stennett.
Yeah.
I'm sure you'll have a nice chat.
Yeah.
with him.
Yeah.
Research
We
economics
know
and
Robert.
programming
Yeah,
division
man.
and financial stability.
Yeah, we know Robert.
Yeah.
But also importantly, there are two externally appointed members.
Right.
Okay, and these members are appointed by the Governor General in Council.
Okay.
So currently, these are Mr. David Billy Marston,
Yes.
everybody knows, a former senior officer at the IMF
Yeah.
and a well-renowned international economist.
Yeah.
And also Dr. Nadine MacLeod, who
yeah.
you spoke with. She is the head of the economics department at UWI Mono. So the committee includes external experts
Right.
who can bring an outside
Perspective.
on the issues that we have to deal
Okay.
with.
So, Dr. Rob, these measures that you spoke of, they are expected to cause demand in the economy to fall and consequently limit the ability of businesses to pass on prices to the consumers. You know, I'm holding you to this. So the next time we meet, you're going to talk a little bit more about that, right?
Sure.
Right.
All right, resident advisor.
Yeah,
signing
man.
out.
Let me see if it's like we
Coming back
Okay.
let me see if it's a work. So before you go, Dr. Wade, we have a question from a sixth form student, Nikanya Brown from St. Jago High School.
My name is Nikania Brown, a student of the St. Diego High School. And my question for you today is, what is the difference between the gross domestic product and the gross national product of a country?
That's a good question, Nikanya, because often we always be talking about GDP. You always hear the governor and the minister and the head of the planning institute talking about GDP. Well, gross domestic product, or GDP, is the value of all the final goods and services that is produced in an economy that is within a specific geographic boundary, within a specific geographic locale. So when we talk about the GDP of Jamaica, we're talking about what is produced in Jamaica.
Okay.
We can also talk about the GDP of a region, or we can talk about the GDP of a parish, for example, or the GDP of a county, or the GDP of a state, for example.
Okay.
Because we're referring to what is produced within a particular space, particular geographical area.
Right.
But as you know, Anna, Jamaica Broilers, for example, they produce here in Jamaica.
Right.
But they also have operations in Haiti.
Right.
They also have operations in the US. Grace Kennedy,
Yeah.
company.
Another multinational.
They
Yeah,
have
all over.
operations in Jamaica. They also have operations in the UK. They have operations in North America, from which they produce goods and services and generate income. So we could then ask ourselves the question, well, how much exactly does all Jamaicans produce?
Okay.
And once we start to talk about what all Jamaicans produce now, that is when we're talking about gross national product.
Okay.
Yes.
It is
GNP.
GNP,
Right.
which is what the nationals of a country produce,
Right.
irrespective of where they produce it.
Okay.
Whether they are producing it in Jamaica or whether they are producing it in Timbuktu. Gross national product, what the nationals of a country produce. So you're going to then ask me, well, how do I get from GDP to GNP?
Right.
Well, so the first thing we have to do is add what Grace and Jamaica Broilers and other investors, what they produce abroad. We have to add that to GDP.
Okay. To get that.
But
Yeah.
we also have to bear in mind that there are foreign companies that are also producing in Jamaica. For example, the Rio Hotel.
Yes.
It's a
Right.
Spanish hotel. It
Yeah,
has
yeah.
operations in Jamaica.
Yeah.
So therefore, we then have to subtract what they are producing
Right.
from GDP.
Oh, because that
Okay.
goes elsewhere.
Because they are different national. So what you have to do then, you take your GDP,
Yeah.
you then add what Jamaicans produce or earn abroad,
Yes.
and then you subtract from that what foreigners do here.
Also like Rio and Nestle.
Yeah.
And Nestle.
Nestle, right.
Exactly. Now that portion that you're adding and subtracting is called net primary income from abroad.
Okay.
Remember this.
So when you adjust GDP for that, you get your gross national product.
Thank you, Nikanya, for that question. And thank you, Dr. Wayne Robinson,
Always my pleasure, ladies.
Bank of Jamaica, for joining us. It's now time for the break. On today's episode, Dr. Wayne Robinson, Senior Deputy Governor at Bank of Jamaica, spoke about inflation targeting. And as usual, here are the fast facts. And number one, Bank of Jamaica's primary mandate, as stipulated in law, is price stability. That is, how stable and predictable inflation is. Number two, the gross domestic product, or GDP, is the value of all the final goods and services produced in an economy, that is, within the borders of a country. Number three, if we add to GDP what Jamaicans produce abroad and subtract what foreigners produce here, we get what is called gross national product, or GNP. Number four, GNP is the value of all the final goods produced by Jamaicans or Jamaican companies, whether it is done in Jamaica or abroad, hence national product, as against domestic product, those that are done here. And number five, Jamaica's gross international reserves currently stand at US $4.4 billion, which is approximately 130% of the benchmark amount, meaning that we have more than enough rainy day savings to cushion the economy in the event of any shocks. And that has been your Fast Facts. Well, that's our program for this week. Very educational. Follow us on Twitter at Central Bank JA or on BOJ's Facebook page. You can also visit the website boj.org.ja.
We also invite you to send in your questions on Twitter or Facebook. And of course, watch Centrally Speaking next week at the same time right here on your station when we will have another special guest.
I'm Anna.
And I'm Sheena.
Thanks for watching.
Centrally Speaking is a production of Bank of Jamaica.